So let's be honest, trying to trade while working a full-time job, it's really a recipe for a burnout. And the problem's not your job, right? It's using a strategy that demands constant attention, a day trading strategy. So the key really is to stop fighting for time that you don't have, but use a method that actually fits your schedule. So this breakthrough comes from a very simple shift in your approach. Stop trying to be a day trader. Instead, use a swing trading strategy on a higher time frame, making all your decisions after the market closes. It's the end of day protocol. By analyzing the market once the daily candle has closed, all that intraday noise, all those fake outs, they've settled. It allows you to make a calm and objective decision. Specifically, we're going to use a simple but very powerful tool. It's the 513 EMA crossover on the daily chart. So I'm going to break this down into a simple rules-based process that you can run through in about 20 minutes each evening. The first step, the higher time frame scan. First, we got to set up our chart. Now, we're not looking at a 1 minute. We're not looking at a 5 minute. The main chart is the daily chart. And you're just going to add two EMAs, the 5 period and the 13. The 5 EMA is going to show a short-term trend. The 13 is going to show a medium-term trend. So each evening, after the market's closed, you just scan your watch list of 5 to 10 stocks. And you're looking for one specific signal, the 5 EMA crossing above the 13 EMA. This signals a potential shift to an uptrend. Now, you need to see price break a recent swing high point as well. So if on the cross, the swing high breaks, then you set your entry order on a breakout of that candle. If not, set your entry order just above that resistance level. What kind of order? We're going to get to that. So you want to keep your watch list small so you get to know the personality of each stock. And that's exactly what Mike, he's our in-house options guy. He handles the tickers that he trades. Now, optionally, you can add a 65-day SMA for a quick way to determine the trend. Prices above 65, you buy only. Now, the second part. Now, this is what really frees you from the screen during your workday. Once you've identified that valid crossover setup, you plan your entire trade for the next day using a bracket order. And a bracket order is just a 3-part order your broker executes automatically. It includes this, your entry order. So to get in, you're going to place a stop limit order because we want to avoid bad fills. You set the stop price to trigger your buy order when the price breaks above the high of yesterday's candle or that resistance zone. Then set a limit price with a 10-cent buffer above it, which is the absolute maximum price you're willing to pay. Your stop loss order, this is your safety net. Set it just below this recent swing low or just below the 13 EMA to protect your capital if the trade moves against you. And now your take profit target, you set this at a key resistance level. Aim for a simple 1 to 2 risk reward ratio, meaning target twice the profit for the amount that you're risking. Now, just so you know, a 1 risk to 1.25 reward, those also work. And there's a higher probability of hitting that profit target. Anyways, once your entry order is triggered, your stop loss and your take profit orders are activated. Now, whichever is hit first closes the trade. This automation is your ticket to freedom. It means you can go to work, you can focus on your job, let your predefined plan work for you without any emotional interference. Third step, this is the 15-minute management routine. And this is your only daily commitment. Each evening, you spend 15 to 20 minutes doing 3 things. First, check your open trades. Did it hit your profit target? Great. Get stopped out? That's fine. It was a planned risk. An important rule for this strategy is to close your position if the 5 EMA crosses back below the 20 EMA, or if a daily candle closes below the 13 EMA, as these signals show that the trend may be failing. Second, look at your watch list for new opportunities, and just like in step 1, if you find a new crossover setup, move to step 2, place your bracket order for the next day. Third, and this is probably one of the most important things, log everything in a trading journal. Note the setup, your reasons, and the outcome. And this simple habit is going to accelerate your learning curve more than anything else you do as a trader. So why is this the perfect strategy? Why does it work so well for someone with a full-time job? Well, first of all, it kills the need to watch the market all day. You do your analysis in a small, dedicated window of time when you're not at work. Second, it takes the emotional decision-making process out of the picture. When you use a bracket order based on clear signals, you lock in your plan before the trade is live. And this is going to stop you from making panic moves based on fear, based on greed, while the market's moving. Discipline is built right into the system. Third, higher quality signals. That daily chart, it filters out meaningless intraday noise. A crossover of the EMAs on a daily chart is a significant event. It means you're trading based on a reliable shift in structure. Finally, it gives your life back. Your day job provides you with stable income. That's going to remove the pressure of feeling like you have to make money on every trade. This strategy is going to let you grow your account without sacrificing your job, your sanity, or more importantly, your free time. So let's do this. Let's walk through a trade. So let's say we're watching the stock. It's in the healthcare sector. It's on our watch list. We had our eye on it, waiting for a setup. So during our evening scan, we see it, the daily chart. The crossover happened, and it happened during a small trading range. It did not break the last swing level, so follow the protocol. We set up our order for the next day. Place our stop limit entry order, set the stop price just above the high of that resistance zone, and our limit price 10 cents higher to protect against the bad fill. Our entry price, $9.33. So we look at the chart. We're going to place our stop loss 5 cents below the swing low, which also happens to be below the 5 and 13 EMA set at $8.41. So we check for the next resistance level. We set our profit target there, ensuring that we have at least a 1 to 1.25. Remember, we talked about that risk reward ratio. And again, you can do very well with that risk reward ratio because the probability of the 1.25 being hit, very high. Next morning, go to work. Don't watch the market. And during the day, price did nothing. During our check on the charts that night, we just leave the orders in place. But a few days later, price moves up, triggers our entry order. Our stop loss and take profit, these are active. A few days later, the stock climbs, hits our profit target. The trade is closed automatically for a profit. Now, we only see the good news when we do our evening check-in. It's that simple. It's pretty much that powerful as well. Now, I'll be honest with you, there are a lot of nuances that I cannot cover in a video like this. You need to look at hundreds of charts. Find what's common between the trades that work, and I want you to think price action, linear versus choppy, and those that don't. Also, test out taking 80% off at the 1.25 reward and trail under the 13 EMA. And there are just so many ways you can adapt this to your needs. Just got a question. Let me know in the comments what your single biggest trading challenge is right now. Is it finding setups? Is it managing risk? Or is it just sticking to a plan? That's a big problem for a lot of people. Now look, profitable trading, it's not out of reach just because you have a 9 to 5. You just need to stop using strategies that were built for people who don't have that. This strategy is going to give you a clear, simple, effective way to trade the markets on your own terms. It's all built on patience, discipline, automation. That's the true pillars of trading success. You can build wealth, you can hit your financial goals, and you can do it without the stress and the burnout because you actually have an edge. Because your time is limited, this strategy turns that into your greatest asset. You're not always monitoring the market.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.